What's up, everyone? Welcome to today's daily market recap. In today's episode, I'm going to break down my trades from the morning. I am sitting in the green on the two stocks I traded. So green on 2 out of 2. That's great. I'm happy with that accuracy. And you know what? Today, I dialed it down a little bit. I said, you know what? Let's pump the brakes. Let's slow down. We've got the overall market gapping down. We have the tariff news headlines that came out after the close yesterday. No surprise there. That's going to create volatility in the market. This time, it was to the downside. So overall market was dropping. And I thought, you know what? If there's ever a time to swing for the fences, it's certainly not going to be a day like today. So I said, let's just reduce the size. Let's focus on getting a couple of base hits, getting green and getting out. So what I ended up doing today, essentially I followed all of the rules that I wish I would apply every day that the market was a little tricky, but sometimes I get stubborn. So today I said A quality setups and A quality stocks. And the result was fewer trades, but higher accuracy and a solid profit loss ratio. The only losses I had were really tiny because they were okay setups, they were good stocks, they just didn't work super well, and so I just jumped right out for a couple $100 loss or a couple that were basically break even. So, all right, let's break down the trades from today. Right now, by the way, we have ICCT squeezing up. This is a little bit of a tricky one for me because I can't help but feel like we're obviously on the backside of this move from earlier in the week, right? We had this sort of multi-day squeeze up, and then we had a day of pulling back yesterday, and then today it's bouncing back up, but there's no catalyst. So you know what's really interesting about this? Let's get zoomed in right here. So what happened? It's going sideways, and all of a sudden it squeezes up here, and you know what I noticed? On the bid, a 111,000 share buyer. That's a pretty substantial buy order. So a big buy order sitting on the bid. The stock squeezes up to 390, and I'm like, okay, it's gonna break over 4. What does it do? A moment later, it flushes all the way down to 330. Then it rips back up to 4. Then it drops back down to 365, and then it squeezes back up here to 440. Here's the problem with this price action. How do you trade that? If you buy the breakout and get stopped out, you're furious. And if you buy the dip, well, what about the other ones that went into halts down? TIVC, just as an example, this one keeps dipping and halting down. It's done several halts down today. So there was another one right there. That just doesn't feel safe to buy the dip. And so I don't feel comfortable buying the dip when you see these big flushes, at least right now. And I also don't feel comfortable buying the breakout. So then I guess the answer is I don't feel comfortable trading it. And that is the answer. And I did not trade ICCT. Even though it's up right now 105%, I just didn't feel comfortable trading it. So let's go back to the very first trade that I took this morning. So when I first sat down this morning, I looked at the scans and I noticed that we had a number of lower priced stocks that were gapping up. Now, look, that's fine. I know a lot of you guys like trading lower priced stocks. You can, buy a lot of shares, even with a relatively small account. If it goes up 20, 30%, you're locking up a nice return on your small account. But for me, in order for me to make good money on it, I need to buy hundreds of thousands of shares. And unfortunately, it's not easy to move in and out of the market with 200,000 shares. And I ended up just grinding commissions and not doing super well in these low price stocks. So for the most part, I leave them alone. So NIVF, I said, nope, not going to touch that. There was another one this morning, APVO, a little on the cheaper side. Squeezed up yesterday, pulled back. Squeezed up pre-market, pulled back. Coming in at 7 a.m., I was like, no, we're in the shadow of this big move. We're on the backside. I just don't feel like I can trust it. So no trades on that one. We had a couple other lower price stocks that were on the scans, although some of them may have sold off a little bit since the open, so they're not at the top of the scan anymore. So the stock that I was paying attention to coming into 7 a.m. was TIVC. This one had popped up a little bit yesterday, pulled back, popped up again pre-market. It's at a price range that I can do a little bit better on, between, above $2 a share. So, $4, $6 range here. I can work with this. I can probably get 20, 30 cents a share out of a nice trade on this. 10,000 shares, it's $2,000, $3,000. So TIVC, let's get dialed into the first trade I took. So this starts to pop up right here at 7 a.m. We get the break of VWAP right there. You see that? Actually, it was just past 7 a.m. So that was 7 a.m. This was like 7:20. So right here, when it comes up to the VWAP, the second it came up to that level, it was on my scans and I was looking at it. So the scans that I'm using to find that kind of setup are the running up scans right here. So it's not going to hit the high of day scanner until it actually makes a new high of day, literally. But it was able to squeeze up, and so it hit the running up scanner. So I've got the audio alert set on the running up scanner. You can choose the chime you want. You want the dog bark? Do the dog bark. You want whatever you want. You choose your chime. So choose your chime, set it, and then boom, you're gonna get the audio alert when that starts popping up. So it starts popping up, I hear the alert, and I pull it up, and immediately I was like, okay, I like this, and now the question is, where can I buy? So as it pops up right here, it squeezes, as you can see right here, and does a micro pullback. I bought that first micro pullback right there at 473, and then added at 476 and 489. 10,000 shares, pops up to 5, micro pullback goes up to 510, micro pullback up to 515, 520. So the first trade ended up being about $3,000. And then I ended up adding back to it, as I typically do. So I added back at let's see, right up here for the break of 550. So we start to squeeze up. And now let me show you the 1 minute chart. This was interesting. So on the 1 minute chart here, we had this nice squeeze, and I was waiting for the first 1 minute candle to make a new high. Now you can see we kind of got that here, right there. But the problem is we had topping tail, topping tail, topping tail, topping tail, topping tail. So let me give you a little pop quiz. All right, so pop quiz. We've got a stock here. Oh, let me just get this. It's kind of like in good shape for the pop quiz. All right, pop quiz. We've got a stock here, TIVC, currently up about 50%, has just squeezed quickly from 4 up to 5, all the way up to a high of 535. Now it's pulling back. Do I buy this first candle to make a new high right here? That's the question. That's the pop quiz. The answer for me is no. Now, you might be surprised. You say, well, wait a second, Ross. The MACD is open. You've got nice high volume on the buying candles, light volume on the selling candle. Why would you say no? And the answer here is because of this history of topping tails. So because of those topping tails, I said, no, I can't trust it. And look what happens. This candle pops up for a second and then flushes down. It is not a clean breakout. It's unfortunate, but it's just these topping tails. What they're telling us is that each time the stock pops up, it gets pushed back down. Pops up, gets pushed back down. So it's not trustworthy here. So the answer there, no trade. Now, however, it squeezes up here, and this honestly surprised me, given the fact that this wasn't very clean, and this candle that actually made the first new high, was on lighter volume, even lighter than the selling volume. And then suddenly it goes up to 535, and it goes up to 540, 550, all the way to 570. And I said here, this isn't a good long setup, but anyone who's short, thinking this was going to fade, is probably covering over the high. So I'm just going to do a quick scalp, basically jump in and see how much it pops up just on short covering. So I got in and I got out, made another $1,000 on that. So now I'm sitting up just under $4,000 on it. And then right here, I do the first 1 minute candle to make a new high. Now this one I actually thought was a little risky still, but I was like, I'll give it a try, and it gave back $900. No, it wasn't quite that much. I gave back a couple $100. So it ends up dipping down, and then it comes back up again. But at this point, it fails. And now look at this ascending resistance or descending resistance line. This line right here. So if we go to the settings here, I'll just make this a little bit more bold so you can see. So let's see. All right, so we're talking specifically about this line. I'm just gonna make it kind of a brighter. You know what? Maybe that was the brightest color. It doesn't matter. So we'll just go like that. All right, so that's actually a pretty good color. So let's look at that line and look at that, how it comes right up into there. So now I'm like, okay, we've got descending resistance. So when it comes back up again right here, I don't feel comfortable buying into that level. It ends up breaking it, and I said, if it can hold, then I'll take a trade for the next leg up. It was not able to hold, it sold off again. Then it bounces off of VWAP, sells off a bit more, comes back up, pops at the open, and I was like, nope, can't trust it. So that was it. My only trades on this basically were right in here. And I ended up locking up $3,971.25. That's my P&L on the day. That's TIVC. That was OSRH. We'll look at that one next. Up $8,871.47. Not bad. And my last trade was at 8 a.m. So today I traded for about 90 minutes and I locked up $8,800. So next trade, OSRH. Here's something that's also interesting. When OSRH started to pop up, you know what started to drop? Well, TIVC. So we got that shifting of attention from one stock to the next. So my first trade on OSRH, so we're going to get zoomed in on this. So it was right in here. So this pops up here, it drops down, and I'm like, nah, I don't know if I can trust it. Then it squeezes up right here, dips down, and I actually bought this dip right here. I got a pretty nice dip inside this candle right here. It sold off, let's zoom in on the 10-second chart. So let's get in on the 10-second chart so you can better see what happened right there. This is what I love about the 10-second chart is I can kind of show you in detail a specific little area that's not always visible on the 1 minute. So let's see. So it's right here. So this squeezed up here, increasing volume, which is great to see. It pulls back, and I'm watching for first 1 minute candle to make a new high. And right down here, it bottoms at 235, and it kind of tested it twice. And then all of a sudden, the selling sort of paused. And I bought right about here at it was 245. Yeah, so I got in at 245, 246, 247. Now, mind you, by the time I took that trade, I already had a cushion on my first trades on TIVC. So I had a cushion on the day. So when I saw this setup, I'm thinking, I'm in the green, I've got a cushion on the day, I'm gonna punch it. 4,000 share starter, doubled to 8, went up to 12, went up to 16, went up to 20. So now I got 20,000 shares. We get this squeeze, I add for the break of 250, it squeezes all the way up to 275, 280, boom, I take my profit out, $4,900. And that was in about basically like a minute, right in this little area. Now, I took my profit out because the high was 275, and although we broke it, we immediately started to see selling, so I was like, I better get out. And what ended up happening was we got a rejection on the 1 minute. So first 1 minute candle made the new high, and there was an opportunity there to make money if you got in on that dip, and as long as you were quick to take your profit, but then it didn't hold up and it sold off. So it sells off a bit, goes sideways, it tries to curl back up right here, tries to curl back up right here, and I was like, no, I'm not going for it. I don't want to trade the backside of the move. I want to trade something that's really moving quickly. And so then that was that. And ICCT, this one ended up making this move, but, left it alone, was worried it would just be a little bit too crowded. Ends up that you got another one of those jackknife candles. So let's look at that one. That happened while we were doing the recap. So where was it? This was the one that we were talking about first. That was that one. Then it popped up, and then, I guess right just from here, that was a pretty big red candle. I was just looking at the 1 minute. But the one that I really noticed there was the one that we had already looked at right there. Yeah. So anyways, a little bit choppy today, but I think the name of the game right now is being disciplined. Get in, get green, get out. Don't overstay your welcome. Don't overcomplicate it. I mean, realistically, my winners were like 25 cents or 20 cents a share on OSRH with bigger size. And then I had, 3 or 4 trades on TIVC that were 15, 20 cents each. So we're not talking about big cents per share. 10 cents, 15 cents. If you get green, lock up that profit. Pay yourself. You don't want to have a trade where you're up 20 cents and it turns into a loser. So if you get green, to me, especially in this market, take that base hit. And then look, if the stock keeps going higher, maybe I'll get a couple more base hits on it as I did on TIVC. So I think the name of the game is just being patient, waiting for good quality stocks, good quality setups. And then for me, I'm going to hit those trades, pretty aggressively with not like full size. I'm not taking full size. My biggest position today was half size. If full is around 50,000 shares. Like that would be a pretty big position. And nothing today warranted going that heavy. So 10,000, shares is kind of like quarter size, 20,000 half size, 30, 40, 50,000 getting up there. Again, that's on stocks generally in this price range of sort of like 2 to 6. So, nothing was like huge size, but decent share size on a setup that I like. And then just being a little quicker to take the profit off the table. Whereas in another market, rather than take the profit off, I would probably double to go up to full size of like 40 or 50,000 shares and see if I could get, 30, 40, 50 cents a share out of it, which would be awesome. And there'll be another time, that time will come again. It's just not right now. So, if you keep swinging for home runs in this kind of market, you're going to sacrifice a lot of base hits, and you're going to look back and realize you're giving back a lot of profit. So it's better just to lock up those base hits, small green days, and then wait for things to heat up. This type of market is like hot, cold, hot, cold. So one day it'll be hot, and then the next day it'll be cold. Next day it'll be hot, next day it'll be cold. And you might have a couple cold days in a row or a couple hot days in a row, but it's still a little fickle, and that's partly because of what's going on with the S&P 500. Just this sort of headwind from the tariffs and everything else. So manage your risk, take it slow. And by the way, those of you guys who haven't already checked out our anniversary sale that's going on right now at Warrior Trading, make sure you come on over, check it out. We've got special discounts on our Warrior Starter and Warrior Pro memberships. These discounts, these specials will end on Tuesday. So this weekend will be the end of the anniversary sale. All right, so I hope you guys check it out, and I will see you back here bright and early. I'll be streaming at 7 a.m. for members at Warrior Trading. So reminder, as always, trading is risky. My results aren't typical. Please manage your risk and take it slow.